Hello guys, today we are gonna revise ethics chapter of financial reporting. So what is the plan? You guys open your study material and listen to my answers. I'll not read out the questions here. I'll just give the summary of answers so that you can quickly go through the answers and not read those big answers from Institute Study Mat. So starting from question number 1, Infostar Limited is a listed company engaged in dash dash dash. So I'm gonna give you answers in three parts. That is summary of answer. That is which question, which index is asked, like reference to which index should be given. Second is ethical issue, and third is professional misconduct. So we'll go in this sequence of answers. So answer for question number 1 is give reference of Ind AS 115 that it is not a sale, it is a sale and repurchase agreement. Second, ethical issue. Ethical issue is integrity, objective, professional behavior and conflict of interest. And third point, professional misconduct. Clause 1 part 2 of second schedule is violated here. Question number 2, Rustom Limited, a company engaged in oil extraction dash dash dash. Answer is first give the accounting treatment as per Ind AS 16 and Ind AS 37. Give points related to decommissioning at the rate present value that is added to the cost of PPE, and create provision on day 1 for decommissioning, and then write about unwinding at each year end. Second point, ethical issues in this question are integrity, professional behavior, professional competence and due care. Third point is professional misconduct, that is clause 567 of part 1 of second schedule is violated here. Illustration 3, Alap Limited's directors feel the company did a significant injection dash dash dash. So part 1 of answer is accounting treatment. Here no accounting issue is there, is only conflict of interest. Then discuss appropriate action, that is put interest of company first and communicate to directors. Part 2 of answer is ethical issues. Ethical issues here are integrity, objectivity and professional competence. And third, professional misconduct, as the CA is in service, so clause 1 part 2 second schedule is violated. Illustration 4, Sunshine Limited, a listed company in the cosmetic industry dash dash dash. First, accounting treatment. Give reference of Ind AS 116, that is it is a short term lease and lessee is exempt from lease accounting, but ideally if it is not a short term lease then book ROU and lease liability. Second part, ethical issues. Ethical issues here are integrity, objectivity, professional behavior. And third part, professional misconduct, as CA is in service, then clause 1 part 2 second schedule is violated. Illustration number 5, Augusta Limited is a listed company engaged in manufacturing dash dash dash. So first part of answer is accounting treatment. Give reference of Ind AS 19, that it is a plan amendment, that is past service cost is charged to PNL and not OCI. Also give reference of Ind AS 8, that is it is a change in policy due to plan amendment. If Ind AS available on any transaction, then follow Ind AS. Part 2 is ethical issues. Ethical issues here are CA in practice discovers these two issues. Then this issue, then he has two options: report the non-compliance and withdraw from the engagement. And professional misconduct here is, as he is in practice, then give reference to clause 5, 7, 8 of part 1 second schedule. Illustration 6, the directors of Spins Limited are eligible for incentive computed dash dash dash. First, accounting treatment. Give reference of Ind AS 7, dispose of PPE or investment in cash flow from investing activity. It is not a subsidiary or associate. Ethical issues here are professional competence and due care. He should inform the auditors. And third part is professional misconduct, as he is in service, then clause 1 part 2 second schedule. Illustration 7, Infostar Limited is a listed company engaged in the provisions of IT services in India dash dash dash. Accounting treatment here is Now there is no accounting issue. Now there is no legal obligation to pay, but reason for not giving bonus gives rise to ethical consideration as no bonus to employees, so profit increase and CFO gets bonus. Ethical issues here are morally incorrect and employee morale will go down. Third, CFO statement, non-financial data negative impact, not read by anyone. This statement is incorrect and he has to exercise due diligence, act in public interest, uphold professional standards, act in manner with ethical principles. And professional misconduct here is not applicable. Illustration 8. Augusta Limited is a listed company engaged in manufacturing of automotive spare parts dash dash dash. First part of answer is accounting treatment. Give reference to Ind AS 7. Loan to directors classified as cash and cash equivalent. This treatment is incorrect. It is repayable on demand. Then it is a financial asset as per Ind AS 109. Give reference to Ind AS 24. Related party disclosures. Also give reference to conceptual frameworks that it is relevant and faithful presentation in understandability, verifiability and comparability. Second, ethical issues or consultant's duty are get FS rectified, guide the directors about Ind AS and correct treatment. Third part is professional misconduct. As CA is in practice, then he shall be liable under clause 6 and 7 of part 1 second schedule. Illustration 9. As at 31st March, Mitra Limited had a plan to dispose of 75% subsidiary dash dash dash. First part of answer is accounting treatment. Give reference to Ind AS 105 that it is classified as held for sale and it is available for immediate sale in the present condition and sale is highly probable. That is 5 conditions are to be met. Ethical issues here are professional competence. COO has COO has done misrepresentation and he is threatening to dismiss CA from job. That is unethical and CA should approach CO and make him understand. Professional misconduct as he is in service. If CA falls under undue influence, then clause 1 part 2 of second schedule. Also here are 3 more points for the answer. As subsidiaries to be disposed, it should be classified as disposal group held for sale. Also, it should be presented separately as discontinued operation and it should be measured at lower of carrying amount or FVLCTS. And we also have to make a provision. Amount of provision is 1.5 plus 4 equals to 5.5 CR. Future loss, no provision is to be made. Impairment loss already considered in FVLCTS. Illustration 10. Shastra Limited desired to upgrade its production process dash dash dash. Part 1 of answers, that is accounting treatment, is give reference to Ind AS 116 that lessee RU LL give reference of all these. And second part is ethical issues. Ethical issues here are integrity, objectivity. It is compromised if CA allows incorrect treatment. He should communicate or disclose to internal governing authority. Professional misconduct acts as CA is in service. If CA allows incorrect treatment, clause 1 part 2 second schedule. Here a small hint is if CA is in service, then always clause 1 part 2 second schedule reference is given in all the answers.